Hi, myself Arijit Patra. Today I am going to share you the advanced candlesticks chart part 1. In this video, you will know the different definition of the candlesticks chart, and definitely I will let you know the different kind of all other the charts and their uses, and I will let you know the how to identify the psychology behind the candlesticks. So I am a professional trader and come instructor. Basically, I teach the demand supply based technical analysis, and in this video I will let you know how to interpret a candlesticks properly. Basically, there are different kind of conventional pattern, but in this video I will let you know the simply the candlesticks chart, the simple candlesticks pattern, and I will let you know the interpretation behind the every candle. So I'm going to the next disclaimer page. This is not an any kind of recommendation. I don't provide any recommendation for investment tips. Basically, if you want to do the investment in the market, you should take a decision with your advisor. Your financial advisor must be needed to take your decision to before taking any trade. Thank you. So this is our page. Basically, you can follow our Instagram and Facebook page, and also you can personally follow my Twitter account. And this is the my website, the www.launchstockmarket.co.in. Okay, so we'll get back going to the main topic. So there are different kind of chart. Basically, what does mean by chart? Why we use the chart? That is the primary question in the stock market. So basically, in the chart you will know the market sentiments, and you have to know in the market that who is behind your screen. If you don't know uh, to whom you are selling and to whom you are buying something, if you are against some institutional, if you are against some amateur, then what will be the results? Basically, stock market actually driven by the FII and DII, the foreign institutional investor and domestic institutional investor. And without any institutional, you will never get any kind of sharp movement in the market. So basically, if you follow, if you follow the institutional people, if you identify the institutional area, then definitely you will get you will get uh, a high probability trade with a shorter time. So basically there is several kind of chart, but what is the use? I actually prefer the candlestick chart, but there the different chart is there. I especially use that is the line chart and the bar chart. Another kind of chart is there, that is the point and figure chart, that will actually have used actually before 1980, and right now the people use the basically candlesticks. And there is also some kind of chart like raincoat chart, like Hakenesi, but thing is that their uses is the very basic, very basic in the market, and that is the amateur uh, kind of chart, you can say. I practically prefer the candlesticks because candlesticks will let you know the psychology behind the market. So in this video, I'll let you know the how to identify the candlesticks, the different definitions, different part of the candle, how actually candle make forming in the market, in live market, how actually the interpretation of the particular the candles. So conventional, there is uh, several kind of things, several kind of name is there, but technically, I believe forget about those kind of conventional tricks. Follow the my rules, what I actually follow. That is the very simplification of the candlesticks. End of the day, you let you know the interpretation. There is several kind of conventional pattern like evening star, the hammer, the morning star, that is hanging man. But end of the session, you will know how to interpret these things. The people are know this pattern, but thing is that they don't know where to use. So in this video, I'll let you know how to use that kind of chart. So basically I am going to the line chart. Basically line actually nothing else. This chart actually uh, created by closing of every candle. Suppose there is a closing of day one here. The closing is this. Day two closing is this. Maybe this closing is this. And day three, the closing is this. The closing of the every candle, if you join this by a line, then you will get a line chart. Basically what to use? Basically the uses behind the line chart is identify the trend, identify the wave of the stock. Basically I follow the line chart for the identify the wave. When the wave is not a clear, it's not a actually not showing that clearly, then I follow this line chart. Whenever the people are actually make a mistake to identify a wave, they converted this chart to the line chart. Basically there is no other uses about the line chart. And another is the bar chart. Bar chart is nothing but there is two kind of bar is there. One is red bar, one is green bar. But thing is that it is not like the candlesticks chart. One is red and another is green. This is the low, this is the two area, and another is the green. Sorry, I made a mistake over here. Sorry. So this is another a green bar is this. But thing is that the left point of this bar is actually denoting the open of the candle. It could be higher than, it could be lower. And red area is, this is the close of the candle. And again, this is high and this is low. The same pattern is there. This is high and this is low. But in a green, the left hand side is the open, but right hand side is the close. But thing is that the both of the bar is looking same. But why, how you will differ the color of this bar? This is the primary question in this bar chart. Basically, it depends upon the closing of the candle. Whenever you will getting a rally on the area, maybe like this. This is the green, again green, you are getting again green, then you are got a red candle over here. But you're not able to identify them. This candle should be close above the previous close or not. There is so many candle is there, red green is pair is there, but you not able to identify the closing. It is closing before the previous closing or it is below the previous closing. So basically bar is nothing. This use is actually, the use of the bar is to identify the closing. If the closing above the previous candle, then this bar color will green. And another hand, if there is a the close before the closing, the yesterday closing, previous closing, then it is red bar. The below of the previous closing is the red bar and above the previous closing is the green bar. It might be in the candlesticks pattern, you might get the red candle, but thing is that in a bar, whenever you convert it in the bar, that will showing the green one. That can be possible. So bar chart is nothing use whenever you are actually analysis a rally. Then if you want to identify the all green candle, all the closing before the previous above the previous closing, you want to get that rally, want to find that rally, then you have to convert some of the time for little confusion to confirm the confusion, to the what to say, to eliminate the confusions. You can convert the chart into the bar. So I'm going to the example for this area, so you can identify this proper area. Okay, so I'm just clearing this picture. Okay, so I'm going to the main trading panel so that you able to identify these things. So basically I'm going to the daily chart. Okay, so there is a, you are getting the green, green, green. Here the red candle is there. But thing is that whenever you convert the bar, it is showing the green candle. That means the close of the candle is above the previous closing. That means a significant rally is there. Okay, so whenever you are converted into candle, you see this is a green candle. Okay, but whenever you convert it to bar, it is red. That means closing behind this level, that means a significant decline is there. So you need a bar for this area, for this reason. Other than that, there is a no use of the bar. Another, you, if you want to convert it the line chart, then you will get the proper graph, proper wave of the candles. Okay, so identify the trend, it is the great for the identify the trend, and for the on the basis of closing. So there are no other uses of the bar chart at all. So I'm going to the slide. Okay, so thing is that next is the candlesticks. Basically this candle actually invented in Japan to identify the price of the commodity in different time. They actually use, for this reason, they invented these candlesticks. Maybe you will get maybe 200 years ago, this candlesticks actually introduced, but practically it is invented, it is implemented after 100 years later. So candlestick chart, that is a lots of emotions is there in the candlesticks. It should be green, it should be red, and it has a four part like the bar: high, open, close, and low. But depends upon the closing and opening, the color of the candle actually made. So I'm going to the next slide so that I can tell you the things. So basic charting. The trading with the candlesticks is like a trading with 3D glasses, and we will learn all the chart with candlesticks pattern very soon. Okay, so actually you need to identify the emotion of the trade. So before, if you don't know about the emotion, if you don't understand the emotion of the market, then you never able to identify the stock market. So basically what you need to know, basically trader are looking for bearish phase, or trader are looking for bullish phase. This is the primary questions. So how actually made the this candle? I'm going to the actually serious example. I'm going to draw this picture so you able to identify these things. There is a several parts. You actually understand these things. There is a bottom shadow, there is a top shadow, there is a open, low, high, close. Basically in the green candle, the opening is less than the closing. For a green candle, green candle. But in a red candle, the closing is greater than the opening. That means it is the red one, red candle. But how actually made this candle? Basically, I'm drawing this picture so that you able to identify this. First of all, I am actually uh, drawing this picture. So basically, it is opening. Suppose this is a opening, but started move down like a red candle. After that, it move away. Then you will see like this. You will get a bottoming tail over here. Okay, that should be in red whenever it is behind the opening, below the opening, and whenever it is cross the opening, that is that will be green, and again it will start moving up. And whenever it start moving up, it's so like this, like this, like this, like this, it will move up. And after a moving up, it is start above going, and some of the time it is moved down. Then you will get a topping tail is there. Okay, that means some selling pressure are there. Buyer try to buy it. First of all, whenever market opening over here, after that seller try to sell it, but after that area, the buyer again push the market and try to moving up, 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 and after that it is moving down from this level. Then this is the actually selling area. This is actually the selling area. Okay, so in this way actually the candle created. But if I said about the red candle, then it is actually open like this and started moving up. Whenever it started moving up, then the candle color is green. And after that, if there is any selling pressure is there, it try to move down. And whenever it crosses the opening of the candle, then it looks like red candle, red. So you will get a red wick over here, red topping tail, and after that here you will get the whenever the market come down, come down, come down, come down, and seller try to sell, and after that it is moving down, moving down. After a significant decline, it is try to retrace the market. Then there is a buying pressure also there. That means you can say there is a buying pressure, and you will get a small bottoming tail over here. It will actually in red color. Okay, so whatever, this is the wicks of the candle, topping and bottom, and uh, the opening of the candle is this, and this is the this is the closing of the candle. The sorry This is the closing of the candle, this is the opening of the candle, this is the low of the candle, this is the high of the candle. And in red candle, this is the high of the candle, this is the low of the candle, and this is the opening, this is the closing of the candle, this is the opening. That means opening get a less than closing, this area, for a green candle, and closing greater than opening. Okay, closing is greater than, sorry, here the actually I made a mistake, maybe. Closing, it should be less than red candle. Closing is less than opening, is for the red candle. Okay, here I made a mistake. So this is the primary area, and this is the range of the candle. This is the range of the candle. You can say this is the range of the candle. It is range of the candle. And here, this part, if you talk about this part, only for the, sorry, this part. This is the body of the candle. Body of the candle. This is the body of the candle. And here this is called bottoming tail or wicks. Here the bottoming tails means the selling pressure over there, and the topping tail means, sorry, bottoming tail means buying pressure also there, and this is the topping tail means this is the selling pressure over there. Okay, this is the overall concept of the candlesticks. Okay, so basically in this area you can say there is a lots of buyer is there in this area, particularly, sorry, I want to take the green color. So this is the body of the candle. This is the, sorry, this is the buying zone of the candles. This area the buyer actually showing the buying pressure. Here the selling pressure is there. In this area there is a selling pressure totally, and the low of this area showing actually the buying pressure. So this is the fundamental area of the candle. That means the red candle is consists of lots of seller is there. In the green candle, the lots of buyer is there. Okay, so this is the overall area of the candle. So there is a different kind of candle. Okay, you can check. There is a different kind of candle like this. That could be a green candle. This is a candle. It could be this kind of candle. It could be this kind of green candle. It could be this kind of candle. It could be this kind of candle. It could be this kind of candle. But thing is that here the first in this area, whenever it started opening this area, it is started moving down first, then it started moving up, then it shows the green, and again here it is started move up first, then some seller is there to sell off this area and started moving down. And in this area there is a lots of big bottoming tail is there. That means this candle try to opening over here and try to move down, lots of selling pressure is there. After that the price faster vigorously moving up. That means some of the buyer are interested to buy over here, and the candle made like this. This is the very good, very good bullish signal. This candle is looking very good, and this is the very bullish candle actually. If you actually name, give the proper name for this candle, this is the very bullish candle. And in this candle, the seller also not the happy. Seller try to sell the market. After that it is move away, buying pressure is there, and again try to move up, try to move up, and again down. That means here the seller and buyer is indecisive in the market. That means seller not happy, buyer not happy, and market has no actually don't have any direction in the market, whether you the market want to go upwards or move downwards. Okay, so this is the area, whether it is want to move upwards or downwards. So this is the indecisive candle, and oppositely you can say this is a neutral candle. This is a neutral candle. This is the bullish candle. You can say this is the bullish candle, and this is also a bullish. This is the very bullish candle, actually not the bullish candle. I will go to the classification of the candle. That is the very simple. The classification was very simple. So this is the very bullish candle. This is the neutral candle, and this is the actually bullish candle. The first one is the bullish candle. There is the very bullish candle. This is the neutral candle, and again this is also a kind of neutral candle. Buyer are not, also not happy. Seller try to sell off. Buyer want to buy. So in this area there is a neutral candle, and this is the very good candle. This is called very bullish candle. And again this candle showing lots of selling pressure over there. Buyer try to push over here, but seller in this level there is a lots of seller is there and try to sell off. So in this area this is called very bearish candle actually. But actually people are thinking the red candle is showing only the selling pressure, but here the candle is showing selling pressure. A similar way there is a red candle also, red candle like this. Similar way there is a uh, different kind of red candle also there. This kind of red candle, you can get 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 this kind of red candle, another you will get this kind of red candle is there. So first one, this is the very bearish candle, this is the bearish one. Buyer try to buy first, then there is a sell off, try to sell. Okay, again here the buying pressure is there. So there is a topping and bottoming tail. On the basis of closing there is a bearish candle, this is the neutral candle. The buyer and seller both are want to fight, and bullish and bearish both are want to win the market, and both are neutralize their force actually. Here the neutral candle also there. This is the neutral candle. This is the bullish candle. Seller try to sell fast, but buyer in this level, buyer try to want started buying and started moving up. Here the prices start first starting going upwards like this. If we draw this picture like this, then try to move down, and again this is the red one, and selling pressure, lots of selling pressure is there. So this is the very bearish candle, and it is also a very bearish candle. This is kind of neutral candle. This is the very bearish candle. This is the bullish candle. This is the neutral candle. But again you can get like this also. You will get like this candle also. This is also the bullish candle. It looks like this. Third one, and this also the same candle, same candle category. Okay, so this is the red and green candle. I'm just giving you the example. I'm just giving you the example to better understanding purpose. So in this way the candle actually made in the market. Okay, so I'm just clearing this picture. I'm going to the slide first. So sorry. Okay, so I'm going to the next slide. Here the buying pressure and selling pressure. uh, how actually candle made like this. Buyer first sell off their quantities. Again here the buying pressure also there. It tried to move away, move up. Actually started over here, then try to push down. Okay, so this is the area for the. Okay, in this area, you can understand the seller sell off first. Seller sell off first. Opening of the candle is this. First of all, the opening of the candle is this. This is the open. Try to move down. Then try to move up. Again, whenever it is cross the opening of the candle, then it is covered. It is actually looking green. Okay, this is the buying pressure. Actually, whenever the market it started moving down, if you get like this candle, this is called pin bar like candle, pin bar or hammer like candle, and again you are getting like these candles. Okay, just like this candle, then you should book your profit first. If you are in short position, you should book your profit first. This is the primary criteria for trend actually reversal. This is the kind of symptom for the trend reversal, or for the it can be a corrective moment. It can be a corrective moment for the few time beings. You should book your profit in this area whenever you are getting this kind of area. And again you can go for a little long if the risk reward is permitted over here. But other than that, if you are in short position, you should book your profit over here. Okay, so this is the buying pressure candle. Another is the selling pressure candle. The selling pressure candle is look like this. It is try to move up fast. start moving up, buy, and there is some selling pressure, and it try to move down. Whenever it crosses this level, this is the opening of the candle, the candle color will be the red one. So lots of selling pressure is there in this area. You will get the lots of selling pressure. Buyer try to buy, but seller neutralize the all the buyers. Here only the selling pressure all there. And again there is a selling pressure candle. It looked like this. First of all, it tried to move up with a green one, up, and seller are neutralize this area. But color of the candle, both of the different, but the interpretation of both of this candle are same. This is also very bearish candle, and this is also the very bearish candle, and this is also the very bullish candle, and this is also the very bullish candle. Okay, it's showing the selling pressure over here, it's buying pressure over here. Okay, so overall I am just covering this all area. Again, I'm going to the next slide. It will cover in next part. Okay, so thing is that the I have covered all the basic pattern of the candle. Again, you will get the again one kind of candle is more, that is the very bullish candle, and that is the very bearish candle. One is the NRC candle, one is the ERC candle. Nothing else. I will tell you in the next class, next topic. I will let you know the next session, the advanced candlesticks chart part 2.